There you are. Doing all right. How are you?
Yeah, pretty good. Pretty good. Same old crazy week, another crazy week in crypto.
Just a little bit. It's just one sex failing, right?
Yeah.
But yeah, it has been insane. It's good we're on DeFi, right? It's a bit safer.
That's it, isn't it? I mean, there's so many people that are in crypto that have never even gone on the chain ever. Like not on any chain. They're just purely on, centralized exchange.
Essentially.
Which, you're missing out on a lot.
I know, right? This funny because that's actually the people you talk to in daily life, or at least I talk to in daily life, that it just encounter that what they know of crypto is usually just going onto whatever kind of exchange they can find, and then swapping euros for Bitcoin or whatever else, and then see it go up and down.
Yeah, that's literally it.
Yeah, mostly down lately, but yeah. So that's what they know of crypto, and it's not really a very complete picture, right? Because everything that we're doing right now, all the programming that is there, and all the ecosystems that are created, and the way that things. I mean, the ease of use as well, like the way that I, for example, could now choose to transfer you any amount of stable coins, even though you are in Australia and I'm in the Netherlands. That's not seen. That's not even, people don't even get that. Like, hey, oh, that's what it's about, right? They're only about seeing the numbers go up and down, and yeah, that's such a shame. And that helps, or that I think that viewpoint is very persistent because of all of these centralized exchanges. And actually, the centralized exchanges aren't really encouraging people to go on chain. I mean, they make it possible, but it's not like they say, "Hey, get your own keys," right? They're very happy that it's theirs.
Well, I mean, that's it, isn't it? There are, I guess, some, mainly like UX things to do with on-chain and how it is kind of a little bit of a steep learning curve, somewhat, especially for new users. So, there is a barrier to entry, and that will get better over time. But things like this week is not new in crypto. I mean, you have an exchange go bust pretty much every cycle. It's almost inevitable, just because just like in any economic downturn, there's always a number of companies that go bust, just because that's just how it is. They ran their business incorrectly. It took extra risks, and then the market went south. It went and took them with them. So but the general idea is, obviously, if you don't have the keys, it's not your money. It's not your crypto. That's kind of the age-old, truism.
Yeah.
Basically.
Not your keys, not your money, right? Yeah, very much so. Well, in talking about this, I actually think this is a very nice start to the AMA, and I think even though normally we only start after I give my intro, maybe Rainbow will, leave this in the cut, because it's a bit different than normal, right? But that said, maybe we should start the official part of the AMA.
Yeah.
Welcome everyone to Grape Finance's weekly AMA. My name is Nicky, and I'm here with LB, as usual. Welcome.
Hey everyone, thanks for listening in wherever you are.
Wherever you are. Yeah. All right. We have a lot to discuss. We already discussed, the week and FTX going down and stuff like that a little bit, just because that's the banter of the week in crypto, I would say. But we have our own dealings, and there is a lot to do and a lot to discuss. And I think I've also announced that already. Like, there's so much about Vinium that makes me so ultra bullish that there's really. I think we should give that some time. I've gone through the questions and seen that a couple of questions are also leaning towards that. So we could either just first have an extensive talk or just go through the questions first and then see what's left. And I'm proposing to do the second. What do you think?
Yeah, I'm happy with that. I think we should have enough time. I won't explain too much on the question side, so that we can
So
as
you
you
have
said,
some time left.
it all ties in together. So
Yeah. Good. Good. Anything you do want to say before we start, or should we just start?
I mean, I don't want to say too much. I guess I mean I'll just mention that Vinium itself is going really well, and we're going to open up to the public very shortly, and then expand the product suite from there. So if you haven't used it already, you will get your chance to use it very soon on mainnet.
Good stuff. Yeah, I see a 30,000 market size already. Well, that at least if that's only the OGs, that's a a good start.
Yeah.
All right. The first question is Neat Grape, who's saying, "Hey, loose barnacle, as a can't help it. He's going at it, right? As collateralized X grapes value rises and people are able to borrow more and more against it, is there a risk that people will just continue to borrow without repaying loans or interest? Does this place a strain on the system as more and more lenders are required to sustain demand?" That's actually a very good question, and it really leans into capitalizing on unrealized gains, a thing that we will be making available. Um, uh, that's the first part of the alpha, I would say. Yeah, so um, like the thing is, yes, of course, if people are borrowing, then that borrow or the loan actually requires lenders, right? That's the first part of the question. And if people are never going to repay that loan, then the borrowers will just continue to pay interest, and the lenders will simply continue to rake in interest. But that might lock things down. However, when you're lending, you can never borrow your tokens fully. So, for example, it depends on what you're lending, what you can borrow against it. But say, for example, you can lend up to 70% loan to value. Is what that's called. That means that 30% is simply there on the platform. And in the beginning, that might not sound like much, but that means that as more and more capital gets accumulated and is on the platform, it means that 30% that is sort of a over collateralization is a means for someone to withdraw their funds anyway, even though not all of the funds might be available. So the question here is really what happens in the event of a bank run. And that's I don't think that the question was geared towards that. But on that shortly, the most important thing to know is that bank runs in the normal world are dangerous because there's no over collateralization, and with us, there's going to be, or there is, like just like with Aave, it's over collateralized as well. So even if Aave gets bank run, the issue is not so much, hey, are they able to repay the funds? But the issue is far more, hey, can we repay people in the proper funds, like the ones they actually lend it out? Like there might be some trading involved because, the funds are in different tokens, and that might be an issue. So I think it's actually pretty safe, and therefore the sustainability is in the model, so to speak. At least that's my take. What do you think, Albie?
Mm-hmm. Yeah, that's definitely true. I mean, the key takeaway is that they're over collateralized loans. So in other words, you have to put down more collateral than you can borrow. So if ultimately the interest that you're earning on Xscrape should allow you to borrow more over time, essentially by lowering your health factor if the price of the underlying token stays the same at least. But in order to borrow, like, you still need allocation from the lending allocation, essentially. Like, there needs to be MIM for you to be able to borrow, which will be managed by interest rates and whatnot. If the utilization is too high, then the interest is too high, then it's essentially not profitable to essentially take out the loan. So you won't take out the loan. I mean, there's a system of interest rates that works to manage the available amount of capital for loans, and encourage people to pay back their collateral, essentially, or pay back their loan and retrieve their collateral if it's not even profitable to essentially use it as collateral, in other words. But the main point is, all that would happen is Xscrape, if the price goes down of Xscrape lower than your health factor, well, then the Xscrape is liquidated for whatever you borrowed, MIM or USDC, and that's used to pay back your loan. And because the value of Xscrape at that time will be more than the amount that you've borrowed, it always pays back the debt, essentially. So really, there is no risk to, like, people not paying off their loans. I mean, if you never pay off your loan and then the health factor just goes down, you'll just get liquidated. But if it doesn't, well, then you can continue to borrow, and that's fine. You'll just pay interest, on your borrow. The lender will earn that interest, and if there's not enough to borrow, well, then the interest will become too high to the point where it's not profitable for you to borrow anymore, so you'll pay back your loan. So in other words, or in that case as well, someone else would come in and deposit more MIM or USDC for people to borrow against, or for people to essentially borrow, which then means that the interest rate will go down and there'll be more available. So it's essentially just a cycle that manages itself almost, really. Essentially, the interest rates are algorithmically set based on utilization.
Exactly. And this is the Vinium system pure that you've just explained. And I think later on in this AMA, we're going to we're definitely going to talk a bit more about the interaction between the seniorage aspect and Vinium, and how that could work together in a very profitable way. But in the Vinium system pure, there's in both systems there's actually no issue. But this is just simply well explained. Like it makes sense that if your borrowing fee gets too expensive, you stop borrowing, right? You're starting to repay. This is just sound investment or sound financial management, I would say, and we will always encourage that, right?
Mm-hmm.
Okay. The second part of the question is, do you have any plans to genuinely self-repaying loans through tokens that yield when held, such as GLP? Like, I'm not familiar with GLP, but the question, well, stands.
Yeah. I mean, it's no different to Xgrape. Xgrape yields by you hold. Like, you don't see the yield, but you are earning yield the whole time that you're holding it. So it's the exact same thing, and we will allow GLP, which is the GMX, liquidity token that they use for people to trade against,
Okay.
and that earns that yield. So yeah, we are looking to GLP to be added as collateral, and then you can borrow against that, or leverage up essentially if you want to do that. And as well, quite a few other tokens as well will be added like that. And I think they'll kind of be one of the things that ties into the leverage yield farm alongside that, which is essentially tokens that are even the LP tokens are essentially stuck in a vault to auto compound, and then you can borrow against that and leverage up, or even just have extra capital for something else. But essentially, you can be earning yield at the same time while doing so. So in other words, the your health factor will, as long as the token price is the same, the health factor will go up. So you'll be able to borrow more. Is essentially how the self-repaying loan works. Like, it doesn't actually come, sell the yield and then pay back what you've borrowed. It doesn't work like that. It works, essentially the other way that I just explained, where it goes. The increase of the value of your collateral increases in dollar value, and then you're able to borrow more against that. Or eventually, it will get to the point where you've essentially paid off your entire amount because you've essentially borrowed nothing almost compared to the value of your collateral. Obviously, that will take a little while, but in theory, that's kind of the idea.
And the real question here is, will this be automated? And your answer is obviously no. You have to do that yourself, right? Because you have to, as an investor, you'll have to decide when you figure that you want to repay your loan. That's not up to the protocol unless you get liquidated, of course.
Mm-hmm.
But the thing is, with Aave as it stands, if you have a borrow and you want to if you have a loan, I mean, and you want to repay that, there's an option to simply select one of your collateral assets and then repay that automatically. And then what they do is create a flash loan and repay, and then decollateralize, and then sell that, and then take care of the flash loan. That's back end, but at least that's an option. And as far as I know, that's also an option you would like to include, right?
Yeah, that's definitely something we'll be adding.
So while it would not be a situation where the protocol would use the yield to automatically repay the loan, it would be like a few clicks of a few button clicks, and then you would sell yourself as a user would decide when the interest is nice enough to be repaying the loan. Because the whole thing is, if you let the protocol decide that, then you might say, hey, but I actually want to have a bigger I want the bigger exposure, because then my interest is more, right? So it should be up to the user to decide when it should, and that's why it works the way it does, or it's going to work the way it does, right?
Yeah, cool. I mean, it's different ways of looking at it. What you determine as as paying off your loan. If you want to liquidate your your collateral essentially and just take out the whatever you borrowed, well then you would need to actually flash loan it up, and then you are using your collateral to pay off your loan, and then you get whatever's the difference in that essentially. Or it's like where you just keep the collateral, and then you can have your health factor raise on that as the interest accumulates, and then pay back your loan based using the actual whatever you borrowed, whatever stablecoin, etc., and then getting your collateral back. So it depends on what you actually want. Like, you want the collateral? Do you want the whatever you borrowed? More so, yeah.
Yeah, so there's multiple options. But it comes down to the same thing. But I think we've explained it pretty well. Then we move on to Peter Flea, who's saying, what is the future of Grape if it isn't linked to Vinium at all? Thanks, fam. Shit market, stay safe. That's an assumption there. That's an assumption there that I don't think is correct, right? Because Grape is, in a way, linked to Vinium by ways of, profit sharing over wine, by ways of being able to stake or to collateralize with Xgrape, and so there's definitely a link. But the question is, I would say, what is the future of Grape? Well, I think it's bright, but
yeah. Well, I think there's quite a few different things I'm sort of planning now with Grape in terms of which way we take it, or essentially to be. It's first of all, like, it is, as you mentioned, tied to Vinium in ways that it needs to be. It doesn't make sense to tie it any other way, really, to be honest. It's a lending protocol. It does lending, and Grape's essentially a farm right now, and has yield bearing assets, and we can use those assets as collateral on the platform. I mean, that's essentially the ideal link that you'd want for the platform. Anything else, we'll have some revenue share as well for wine with a share token of the Grape platform. But in other words, it's like tying it too closely with some other, essentially how more closely can we tie it without making it, without essentially adding another barrier to entry for people to use the platform that's unnecessary and doesn't actually add much to Grape anyway. So, what adds to Grape now is obviously that you can borrow against it in Xgrape. Like, that's a fantastic synergy between the two platforms. They both have their own uses, and they tie in very nicely together on that. So I think that's perfect. But the future of Grape, obviously we have quite a few more things to do with the game that essentially will become its own thing as well, very closely linked to the ecosystem, but also branched off into more of a live based game as well, alongside the idle game that we have now. So that's one sort of section that we're gonna increase development on in the Grape ecosystem. But
this is not the winemaker game or whatever, right? This is a different and new game that we're talking about.
Yeah, it's essentially kind of tied into the winemaker game. Like, winemaker game it's an idle game, and we'll be updating that and essentially expanding the use of the idle game mechanics, but tying it in with a sort of more of like a live game as well is something that we're looking to do, because I think gaming will be it already is a huge thing, but it's kind of like a good entryway to crypto as well. for non-crypto people, and has a very wide reach in that regard. But in terms of Grape, Peg, and Farm, there are quite a few things that I've been thinking of what we can do, and what direction we can take it. And I don't have the exact idea of how we're going to do it just yet. So there's something I'm still working on. But we're going to try some pretty cool things with Grape to kind of make its own unique thing. So that's what I'm looking to do really with Grape. It's the cornerstone of the entire ecosystem, and it ties in with everything else that we do. But I also want to make it its own kind of unique thing, not just like a Tomb Fork, essentially. Even though we have branched off quite from there, but still the mechanics are very Tomb Forky. So, I would like to do something pretty cool there, and I've been thinking about some good things, brainstorming some good things with that. So,
awesome. I'm really looking forward to the concepts, really, because I like to think about stuff like that as well. But that's for a private conversation, I would say. Moving on, Cryptotoad plus plus is saying, how will wine emissions and ending affect Xgrape since it is built of the Magic Yield Farm selling wine rewards? That's
right now,
a good question.
Right now, it is obviously using the magic token to generate the majority of the yield. The remaining comes from the small tax and the burns on the mint and whatnot. But essentially, it's just an LP token that we can reward any other way as well. So, likewise, we'll be or have already kind of planned to what to do post emissions. In other words, we can just pile that LP into say like a bribe farm or whatnot, and then you have emissions there anyway. And then that now makes up Xgrape. So essentially, it will just move to whatever is the best yielding mechanic for the LP at that time, which may change over time as well anyway. So essentially, to answer the question, it just kind of just migrates to the next thing.
All right. Sounds good. Just to be sure, though, we are never abandoning all tokens. This is just a general thing for people who don't know us. We never abandon all tokens. So even if we create something new, all things will remain valuable within our ecosystem. Just wanted to have that very spelled out because people tend to be scared about version 2s and stuff like that. All right.
Oh, yeah.
And next one is Neat Grape again with, hey, Leggy Blonde. This is a bit left of field, out of the left field. I think this is a baseball term, but okay, this is about out of left field. But I'm curious to hear your thoughts. Do you think there's a way of doing sort of a decentralized exchange that handles transactions between fiat and crypto in a centralized way, rather than just using centralized exchanges like Coinbase to offer on-ramp options? Yeah, this is something that we've really been desiring to do from the very beginning, right? But there's a lot to be there's a lot of hassle.
But yeah, I mean,
But
basically, the government doesn't let you do that. In other words, that's how it doesn't. That's how it works. Like the government, the only way it would work is peer-to-peer exchanges, which you can do. But essentially, it's still you still have to transfer money to a bank or to some in real life asset, which is custodian, held by a custodian somewhere. The only way is if you do cash, but then it's kind of like, well, then it's really like a peer-to-peer exchange, you selling your assets for this cash, and then you have to meet the person up, and that's just there's a lot of risk involved in that too.
Yeah,
Yeah.
definitely. Well, the only real way to be able to do this, I think, is to issue a stablecoin based on a collateral of non-crypto assets. Like, and you could do it with cash or with, I mean, you could do it with your dollars or euros or whatever else. Like, I personally dream of a system of doing that with gold, like PaxG is doing,
Mm-hmm.
or maybe a variant of that.
Mm-hmm.
But as soon as you do that, then we'd be able to do a thing like that. For example, if my future dream of doing that with gold becomes truth, then I would simply say, hey, just send me gold and I'll send you stablecoins, or just send me stablecoins and I'll send you gold. But it's not very easy, right? It takes a lot of, it takes a lot. Right?
Yeah.
It's
You still have to
this
custodian,
yeah. I
hold the
still have to have a
gold.
huge vault. Yeah,
Yeah,
I
and
still
then
have to have a huge
audits of
vault
that.
to put a goal in or whatever, right?
Yeah.
So it's
So
not
it's
these things are
yeah,
yeah,
yeah. But I
but
mean,
that's
basically,
exactly
you're
what
still
Circle is
trusting.
doing and stuff.
Yeah,
Yeah,
well, that's it. You're still trusting Circle. You're still trusting PaxG,
Paxos.
Paxos.
Yeah.
So there is still an element of trust there, where you're trusting a third party or a custodian. And the issue as well is kind of the regulatory concerns around that, with the different jurisdictions as well have different laws on that. Different KYC requirements. Then the KYC data needs to be stored somewhere too, and then there needs to be reporting functions on transactions and things like that when you run an exchange.
And most likely some taxes as well,
Oh
somewhere
yeah.
for some government or whoever, whoever just wants to lean in, and
Yeah.
get some
Take their cut.
yield
Yeah.
for nothing. So yeah, but
So
it's a nice
yeah.
future, I would say. It's a very nice
Mhm.
future actually to be able to provide that, but it requires a person to be bigger because you need to provide security and also that takes a lot of overhead as well. So, for
Mhm.
example,
Mhm.
if you hold large cash amounts and you would really hold them, like not have them on a bank, um, that would mean that you'd have to defend that against robbers and against
Mhm.
whatever else, right? Against
Yeah.
fire, even. So that takes overhead and that costs money. So it's something that takes a lot of planning. But
Mhm.
yeah, it would be nice to be able to do
Yeah.
that.
Definitely.
Right. Neat Grape is also asking, hey Lima Bean, when do you plan to do round 2 of the Corker Mint of all those winemaking for all those winemaking pros?
Mm-hmm. Definitely. That's something I definitely I wanted to do it this week, but I think want to set something up for it. I think I'll just try maybe do a small run this week, and then keep auctions going. I think until they're all sold out, probably. So I'm just thinking of the implementing the best way to do it, and then I'm gonna do it as essentially ASAP.
Right. Cool. Then we go on to Alp Müller. How high is the expected revenue for Wineholder from Vinium with a market size of 100K? And then Sam answers billions and billions with Trump. Um, I think, first of all, it's interesting to note that the market size isn't actually what provides the revenue. It's the amount that people borrow that makes the
Mm-hmm.
revenue, right?
Yeah.
Because you
Yeah.
pay for the borrowing and you get interest for putting up collateral. Um,
Yeah.
But that's sad. What are your plans? Like, how much profit sharing would you be allocating to wine? It's actually a nice question.
Well, initially it will be we'll probably do 50% of the profit going to wine and the rest to a reserve. But for 100,000, yeah. So as you mentioned, only if people borrow is their actual revenue. If people just deposit money, then there is no revenue. But you do need people to deposit, otherwise nobody can borrow anything. So you need both, obviously.
Yeah.
But for revenue, you need borrows, and that will come as well when we do more leverage farming as well, because then it will be and implement strategies and whatnot, because then people will be have some good reasons to borrow as well. So that will come. But in terms of like $100,000 of borrows is really not that much for revenue, because essentially we're taking a percentage of the borrow APR. So, and that will differ based on the pair on the token, and essentially like how risky the token is and whatnot. We'll take more of a share for that. In terms of like the actual revenue that the protocol gets, that's then also distributed out. So because most of the borrow APR is obviously given to depositors, that's where the deposit APR or APY comes from. It comes from the borrowers. So and then we take a cut from that essentially. So in other words, you can just do some like simple math on borrow APR estimated on 100K, and then a percentage of that, say 30%, 40% of that, maybe 50% depending on the token. But 100K is not a lot. It's not a lot at all. It's not going to be. It's going to be scraps essentially of revenue. So we're looking to push to like millions of dollars of market size and deposit and borrow, essentially, because that's what we need.
Yeah, and that is absolutely possible, I think.
Yeah.
It's also something we've now come to the end of the pre-asked AMA questions, and I'm moving on to the live chat. There was a question here: can Lenny Bruce pack a token to Genie Wishes, which I think means Grape Walrus. But first of all, I would like to devote some time discussing the interaction of Grape Finance, I would say, with Vinium, and then particularly at Xgrape, right? Because what we've already established is that Xgrape, of course, has a certain revenue or inbuilt revenue. Like Xgrape is a yield-bearing asset, and of course that would get you to a certain amount. But we've been discussing, you and I, and at some point we've decided like what should be the loan to value, right, for Xgrape. And this is interesting because Xgrape, as anyone knows, is halfway at like half of it is MIM. So essentially, 50%, the 50% bar, or maybe a little bit over 50%, because there's buy tax and sell tax. But so let's say the 55% bar is really interesting, because say you hold MIM and you then like say you hold 100 MIM, and say you pair that with Grape, an equal amount of Grape, because that's how LPs work. You then have a value of 200 MIM, and then you put that up as collateral. If you can then borrow 50%, you would have 100 MIM again. But if you'd be able to borrow like 55% or 60%, you would have 110 MIM or 120 MIM, which means that you can then start pairing that up again with more of the grape you have. And this is a way in which it would actually be very attractive for people to just never sell their grape, or at least, only when it's, a really good price. Because you can, for example, if it's 60%, I don't think you've already decided what the actual loan to value is going to be, right? Or have you?
Well, initially it's going to be 40%, and then we'll ramp it up. As it is an isolated pool, we can take on more risk. Like the lenders can take on more risk because the essentially they know what they're lending to. So
yeah. Well, let's just assume that if that's in the future ramped up, the thing is that you can then, um, essentially what you'd need is just Grape to add to your other stablecoin, so that you can then borrow more against it. And the thing is then, it becomes less and less it becomes more and more interesting to just never sell, or at least not sell very often. And this, I think, would easily bring back Grape back to PAG at some point, because it's actually profitable to do that. And once we're there, it would be the winery that starts printing again, and then you just assume that you're having some MIM or whatever, like 100 MIM, and you get your grape from the winery, and then you add that to your MIM, you borrow against it again, which gives you even more MIM than you started with. This is essentially a way that the self-repaying loan is going a lot higher. And even this might sound very dangerous, but first of all, it's going to be an isolated pool, right, as you said. But at the same time, if you think about it, it's, of course, this is not 100% true, because the price might go up and down. But since Xgrape is 50% MIM, and for example, you'd be loaning, having a 60% loan to value, the amount that you're loaning against grape collateral is only 20% at that point. The other 100%, or the other half, is actually loaning against the asset itself. And this, I think, is really interesting, because it's actually not that high risk, and at the same time highly profitable to not be selling the grape. And as soon as it is highly profitable to not be selling the grape, that's actually really good for the protocol, and that will just have us continuously going up. So that's what I mean with being really, really bullish about it, because this is a way to actually change unrealized assets, so to speak, like a grape, for example, into a way of realized assets. And of course, what that requires is for people to actually put up the MIM for borrowing. So people need to want to put up MIM, or later on USDC probably, as collateral. But it's quite a good deal to be doing that, because you're getting a nice percentage, because so many people would be borrowing. And of course, you won't get a percentage for your collateral against Xgrape, because you won't be able to borrow it. But Xgrape in itself is appreciating, and via this way, or what this means is that it will become more and more popular. So in that way, it will also become more interesting. And with for example, it being 55% or 60% loan to value, even when someone does manage to get liquidated, which I would say is quite a feat, but if you're able to do that, then it won't probably make a huge liquidation cascade or whatever, because between the loan to borrow value and the actual liquidation price, we could easily put like a 20%, right? So, for example, the loan to value would be like 50%, but you actually only get liquidated at 80%, and all that 20% in between, you're simply not allowed to borrow more. So we would actually put more safety in place for you. And I think all in all, of course, any kind of scheme like this would be risky, but all in all, it's very transparent and very clear. And if you're getting margin calls, it's actually very easy to simply take away your collateral and burn the X grape for the LP again, and at least start repaying with your MIM side. And you won't even have to sell that much grape, right? So,
You can manage it.
I think there's so many ways to manage this quite safely that it's actually it could be a really, really beautiful system, and I'm definitely so much looking forward to this being in effect. This is the thing actually. Whenever the first time you said that you wanted to allow people to be borrowing against the assets of the seniors protocol, I think was somewhere in February. You told me that we had a call, and this is actually what got me so enthusiastic then about Grape Finance, and now we're starting to actually get there, and I'm so giddy about it. I'm like, whoa, we're finally getting there, right? But it's such a bullish thing, such a bullish picture. So that's to start off this conversation. And what's your take on it so far?
Yeah. Well, I think that's kind of why we have gone to lending and borrowing, is because there's so many cool things that you can do with it, and it ties in really nicely with any sort of yield bearing asset, to leverage up or to essentially capture bonus yield, but then also be able to use the tokens elsewhere. It's highly capital efficient, even though it is still over collateralized, which makes it adds a safety feature to it. But there's so many different strategies you can do, so many different things that you can use the platform for, essentially for your benefit. That I'm really excited to be launching it, and then kind of building a whole bunch of automated strategies on top. Really, that's kind of what we're aiming to do.
Yeah, most definitely. Well, I of course this whole story came up because I'm putting together or I have put together the content for the educative videos that are coming out about Finium. I if the sun wouldn't be in my way, I would already have made a first amount of first batch of videos. But the thing is, in my current house, the way that because we live on the south side and we can't really block the sun off, that means that any filming needs to be done in the morning, because otherwise we have such high contrast that we can't really film. So that takes some adjusting, because mornings they are by nature early, so need to deal with that. But it's coming up. We're going to deal with it, and we're going to provide you with some educational videos that are, of course, going to be edited by Dave, and Fizzle is also contributing to that. He already has, by the way, because he put some feedback on my content. But anyway, I just wanted to say that the more I learn about Vinium, or the more I think about Vinium and its uses, the more bullish I get. Because, of course, Aave is already doing pretty well. But Vinium, with its integration of YBAs, yield-bearing assets, and the ability to borrow against that, is a step beyond. It's just very, very, very good, I would say. And well,
Yeah, it's a different. It's technically a different market, but we're also kind of aiming to be quite composable and flexible in what you can do as well. Like so it's part leverage yield farming, part leveraging up yield bearing assets, but it's also your typical standard borrowing platform as well, so that you don't just have to leverage up. You can use it essentially in any way you want to use it. It's very flexible in that regard.
yeah, most definitely. I'm also including in my lessons just an example of someone, wanting to buy a PC and thinking, yeah, I can do that because,
Yeah.
my collateral asset is going up in the future. So, but I want the PC now, not later, right? So these kind of things are also just ways, but that's just the basics. That's just Aave. But I think the interaction is just so much nicer. It's
Yeah,
really, really
yeah,
good.
yeah.
Um, so what else? Let's just look at the live chat. Starting the party, as it were. That's just a meme that Rainbow put down. Saying the saying, morning, afternoon, evening. Hey y'all, would love to hear a general gist for the end of Q4 and into 2023. Any roadmap update?
Oh, yeah. We're gonna update the roadmap because it's obviously that was done almost a year ago now, and the essentially the overall goals haven't changed, but I guess what we're going to implement probably needs some updating for like the next year in general, to be honest, rather than just Q4. So we will be updating kind of roadmap and kind of what we're going to do, with Grape, and then Vinium, and sort of the game aspect as well. So yeah, there'll be some changes and some updates with kind of like a new roadmap for essentially the whole of 2023.
Right. I had switched off my mic, so I needed to switch it on again. Thank you for that. So that just simply means that the roadmap is going to be updated, and you will hear more about it. Saint reacted to his own message with a check, so he heard. Thank you, Saint. All right. And he also says that some DGen is going to forget their tokens are deposited. You don't actually move it, by the way. Get the check back. Good. Some DGen is going to forget their tokens are deposited. And some John is worried that people are talking about wine. And no, it's about people lending on Vinium, forgetting that they borrowed and getting liquidated or something. Yeah, that kind of thing happens, right? It happens that you either forget about it, or you go on vacation, or you get incarcerated, or you get sick, or you die, right? So many things that life could throw at you, or you get dementia and you don't know anymore,
Yeah,
or you forget your keys, you lose your keys, your house is
yeah,
on fire, your paper wallet's gone, right? There's so much that can happen that you have to have um, that you have to have contingency plans against, and not everyone has a lot of contingency plans. So
mm.
um, this is just a general thing to say, hey, have contingency plans. Like for example, your partner or your close one should know where to find your keys at least, right? Because if you're incapacitated in whatever shape or form, um, be sure that the tokens which do represent money are not lost. This is just a general thing because crypto is so young that I think that a lot of people are simply not thinking about this.
Yeah.
Right? But it is definitely something that you should be thinking about. Uh, but yeah, people are going to forget. It's simply a fact, and then they might get liquidated. Stuff
Yeah.
happens.
That's it. You take responsibility for it and have some contingency plans, like you mentioned.
Yeah, and I think it bears mentioning that we set the liquidation levels at such at such a level that there will always be some sort of a margin that will actually be sort of profitable, right? But I actually maybe you can say something about that. For example, what happens if you have BTC and you're allowed a 70% loan to value? I don't know what it's going to be, or what it is actually. What is it? What is your loan to value if you collateralize BTC?
Yeah, I think BTC we've done it at 80%.
Right.
Stop saying 80%, and then liquidation
Maximum
threshold is like
85.
85%. So there's a 5% buffer there on the absolute maximum that you can borrow anyway, which is you pushing it to the maximum. And then there's another 5% essentially, and that's on Bitcoin, because it's a very liquid token. We can give that sort of smaller leeway. But so something with Grape, it's got Grape in there. It's not as obviously nowhere near as liquid as Bitcoin. So we've added more of a essentially a buffer there to protect you from liquidation. So obviously you can go to the maximum LTV and still be, I forgot the exact number because I can't see it on the actual UI because it's on local right now. But
I seem to have it pretty clear here. You mean a maximum LTV, liquidation threshold, and liquidation penalty, or do you mean something else?
Yeah, that's it. Yeah. So the threshold is where you're actually going to be liquidated. The LTV is obviously the maximum that you can borrow. And then so obviously that there's that gap.
Yeah, so that I've got it before me right now, and if you look at the UI, it's pretty neatly laid out. If you go to just assets and then click any asset, it says the maximum LTV liquidation threshold and the liquidation penalty per asset. So, for example, USDC has a maximum LTV of 90% with a liquidation threshold of 95%, and then the penalty obviously is 5%. So if you're silly and you make a mistake and you get liquidated, you lose that 5%. And with BTC, the maximum LTV is, as you said, 80%. Liquidation threshold is that other 5%, so 85%, and you lose the last 15%. So don't get liquidated, right? But if you do, that means that the protocol is actually getting something out of it, or is that the protocol getting something out of it, or the liquidator getting something out of it? How does that work?
Yeah, it's the liquidator right now. So that liquidation penalty is essentially the bonus for the liquidator that they would get. And in this system as well, the maximum that you can be liquidated is half of your position in any one go. So you can only be liquidated essentially half of your collateral in one go. But then which should, in other words, give you a better health factor, because there's less collateral now, plus the penalty as well. But if you are then, leave it even more and then you go on the health factor again, well, then you will be liquidated again. So you can, even if you do get liquidated, you at most in any one liquidation will lose 50% of your position, of your collateral, in other words. and the liquidators, which also will be us, will be one of the liquidators, but it is open to the public. Anyone can run a liquidation bot, essentially, and scan for accounts with low health factor and then liquidate them when available. And they can get that bonus. They can get that essentially so essentially they pay the collateral, they pay the what was borrowed, which can be paid through a flash loan or whatnot, and then they get the same value plus the bonus in the collateral token, which you can do whatever you want with, because that's what you get for liquidating liquidating someone that's taken out too much debt and essentially keeping the platform healthy, in other words.
Yeah. So it's this is an open invitation for people to write liquidation bots.
Mhm.
Yeah. Yeah. I was making fun, but it's actually true.
Yeah.
And the funny thing is, like, some liquidation bots should be more complex than others, right? For example, if you make a liquidation bot for Xgrape, you would also need to integrate that Xgrape can be burned for LP, and then the LP needs to be broken, and then half of the LP can whatever. Like
yeah.
It requires some extra management, but that's sad. It's cool. I like
Yeah.
it. All right. I think that answered that question. Wasn't really a question. Subject object X2 is saying everything is linked via quantum superposition. So there's that. Yeah. Let's just say yeah to that. Right. Saint is asking, can you elaborate on how wine holders can or will receive Finium revenue? Does it end when the Fini token has begun distribution?
Well, no, I don't. We don't have plans to end it. It would probably just you'd be sharing revenue, and there'd probably I'd want to do some sort of tie-in where you can burn one or the other and sort of get like a bonus yield or something like that, or like a dual yield, so you can capture both or something like that. Is what I'd be looking to do. But you would just receive the revenue, actually likely in the deposit tokens, so the VI tokens, which are interest bearing as well. So you would because that's what the protocol receives as revenue. It receives the interest tokens, the VI tokens. So you would essentially receive that.
Yeah, good. You would so as a wine holder, you would get Finium token. This is what you're saying, right? Do I get it?
Oh no, the the VI token. So like the VI collateral token, the VI token for USDC or whatever. Yeah.
Yeah,
You would get those.
I get it.
And then you can essentially just hold that, collect the interest, or you can go back to the platform and then you can withdraw whatever that the USDC, the AVAX, whatever one that you hold.
Right. Good stuff. And how is Finium then tied into that? Like, the Fini token. I mean, is there when is the Fini token going to start? And what is that? What is that going to do?
Well, that will also provide revenue share as well. There'll be likely looking probably do some probably. I'm looking to probably do a gauge system on that token as well for emissions for the protocol, especially spread between different LPs that we may do. For collateral, in other words. But essentially, it's a liquidity incentive mainly to ensure that we have enough liquidity to be able to offer good borrowing in good leverage farming, good opportunities for people to use the platform. In other words,
Right. So when people are putting up collateral, they will also receive some Vinium token, and if you have Vinium token, you get a part of the profit sharing. This is what it is, right? Ties into each other in that way. Do I get it?
I think because there's two things here. Obviously, there's the Vini token, which is just essentially like a normal token,
Yeah.
and then the essentially receipt token for whatever you
Yeah. Sorry.
deposit. Yeah.
I meant the Vini token, right? Do you get a certain amount of Vini token if you put up collateral, or do you get it in a different way? How does that work?
Oh, you would earn it from you would earn it from putting up collateral as a lender or borrowing as well. You would earn this token, um, likely as a vested position, but you would earn it as emissions. In other words.
Right. And then, if I now get it correctly, then if you then have that Vini token, not Vinium token, but Vini token, uh, you would get a percentage share of what Vinium makes, just like wine is getting a percentage share, right?
Yeah, essentially,
Yeah.
you would lock this token or stake it in this pool with varying boosts for different periods, and then you would earn revenue from the protocol. You would be able to essentially vote on emissions weightings um, and things like that.
Cool. And we've got it clear. Sometimes I need to ask some extra questions to actually understand it, but I think if that's the case, then probably there's someone else out there who also didn't get it the first time. So it's never bad. All right. Subject object X2 is saying, "Hey, I've got a tutorial about gelato that should keep you safe from liquidation." Yeah, it's a nice tip. It's a nice thing to be doing because that would probably you can tie it in to your position and then allow that bot to be adding to your position if you're close to liquidation or repaying or whatever. That's how it works, right?
Gelato is a pretty cool tool. Yeah, we
Yeah.
use it for the epochs essentially. So on
Yeah.
on the every 6 hours, Gelato tells or essentially runs a contract to update the oracle because contracts cannot update themselves. They need to be interacted with to update. So that's what Gelato does, and you can do a lot of things with it to automate things on chain. So it's a good tool like that.
Yeah, operator uses it as well. Like it's good stuff.
Yeah,
It's like
yeah,
Cron for Solidity. Yeah. That's what subject is saying.
yeah.
All right. Then Saint has a kind of random suggestion, as he says it, like, but would love to see a net APY percentage on the Vinium dashboard. I'm sure that's coming. Like right now, if
Yeah,
you
I
go to the
guess if you.
dashboard for those people who are not yet on Vinium, if you go to the dashboard, you can look at your deposits, and then it tells you the APY per deposit. But on Aave, if you go there, you have a net APY, and that takes all of your deposits and what you get from that, and balances it against all of your loans and what you pay for that, and gives you a net deposit, like a net APY on your totals.
Yeah.
Like this is a nice feature. It's a UI feature, right? And but as
Yeah,
he
yeah.
said, I'm sure that's coming, right?
Yeah, a lot of things coming to kind of polish up the UI in terms of UX features and kind of one click position entries, things like that.
Yeah. And then I think we've kind of come to the end of the AMA live chat as well, which leaves me with one burning question. Like, and I think I've seen it here and there as well in the chat. Like, when is Vinium going to be public, and when will we be able to borrow against X-Grape collateral? Because those are two things that aren't there yet.
Yeah, so we'll likely open up to the public next week, and this coming week. And I think X-Grape will probably launch towards the end of the week, maybe the week following. And we're also going to launch a curve pool as well, and probably GLP shortly after that as well.
Exciting. Really good.
Yeah.
Okay. Yeah, it simply is. All right. Yeah, I'm very much looking forward to that, and I think a lot of people are. So next week is the week it's going to happen. So stay tuned. Yeah. Anything else to add before any other alpha to drop? Anything else that we need to know before we end this AMA?
I think we've covered quite a lot. I think what haven't I mentioned? I mean, I don't want to mention too much, but we'll be doing some cool things with Vinium as well. In terms of kind of mentioned, the one-click sort of positions, using flash loans and things like that, and the same for unwinding. And essentially, it's going to be mixed, with part standard lending, but also part leverage yield farm lending in the one, which I think is a good way for us to have good liquidity. In other words, because that's obviously a challenge that we may face, is having enough liquidity for borrowers. That's always the thing. But you want to have liquidity for borrowers, but also manage the risk of that liquidity. And so I think that's something that we're in a good position to do here with kind of like isolated pools, but then also blue chip pools as well. So there'll be a lot of cool blue chip pools that I'm kind of looking to implement in the main pools section, and then categorizing risk in sort of like a low risk, medium risk, high risk sort of degen pool layout. In other words, so I mean, there's a lot of cool things coming, but
Yeah.
essentially what we're going to do, yeah.
Does that mean that people are going to be able to borrow against, for example, LPs, or what are you getting at? Oh,
Yeah.
that's nice.
Yeah.
Nice stuff.
Yeah.
Yeah, and that really ties into itself in a pretty nice way, because if people are able to do that, they can simply yield farm, of course, and as you say, leverage yield farm for those people who don't get that. That means that you borrow and then buy more of your LP again, and then borrow again and buy more of your LP again. That's called looping. And the more you loop, the more you expose yourself to the yield. And therefore, if things are done well, then your yield outpaces the interest you need to pay for your loan, so your yield increases. Anyway, that aside, that means that there will be a lot of people borrowing, and that borrowing will become very popular. And as soon as that happens, it will be interesting again to put up more collateral, right? So this really is a fantastic way, I feel, for the protocol to get an edge over stuff like Aave, who doesn't do that, right? Yeah, this I feel is going to really give us the edge that we need to have a niche that people will be looking for us. Well, I'm really happy about it.
Yeah. Yeah, that we, so in other words, we're going to launch, kind of start slow, but at the same time, really focus on the product, and building a really great product. It's less hype. It's less like, hey guys, look, got 30% a day yields. Like, yeah, come farm with us. You know what I mean? It's more like, uh, what do people actually want? How can we make it easier? And how can we make it just like a breeze to use the platform and make the product really good? That's what we're going to focus everything on, in other words.
Yeah, and that is the best thing to do in a bear market, right? Because
Yeah.
hype is simply not serving us right now. We need actual use cases that work in any kind of market, and the lending and borrowing works in any kind of market because
Mm-hmm.
it allows people to short. So if they
Mm-hmm.
feel very bearish on something, it would still help us, right?
Mm-hmm.
So
Yeah. Yeah.
yeah, okay. Thank you so much for taking the time again to be answering these questions weekly,
Of
and
course. Same to you.
thanks to yeah, well, pleased to be doing it, and thanks to the audience for being here, and of course everyone listening in later. I do still feel that we have a fantastic community, even though we've dwindled in numbers a little bit because of so many people leaving crypto at the moment. But I do think that for those people who are still here and now finding out about these new innovations that we're putting forward, I think well, I am happy I'm still here. I just assume that more people are. And well, I'm looking forward to our future, and I think the future is very brightly purple. And well, looking forward to next week, anyways.
Yeah.
Thank you so much, everyone.
Thanks, Aaron.
Bye bye.